Meet The Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
Centralizing technologies are fundamentally reshaping our economy. We hear about them in the news a lot, right? We hear about how artificial intelligence is making everything smarter, or how all of our devices and sensors are getting connected into this vast Internet of Things. Or we hear about blockchain, which often gets a lot of hype in the media today. But unfortunately, they don't really cover what is changing underneath. What's happening to our economic story, our architecture, our infrastructure that we should be paying attention to? So I want to go pretty far back in time. I want to go to our sort of earliest times of trade, where our exchange of value was much more one-to-one and direct. We knew who we were dealing with, right? We lived in smaller societies, and we had a lot more direct control over our trade. Over time, though, the distance and the complexity in our trade grew. And to deal with all that uncertainty, that we didn't know necessarily who we were dealing with anymore, we invented institutions. So we built banks and different mercantile associations, marketplaces, rules of law, basically institutions that could help us grease the wheels of trade by lowering our uncertainty about one another. Eventually, if we really fast forward, we put these same institutions online, right? We have digital versions of all of these things. We have digital banking, we have Amazon, eBay, Alibaba, tools for trading at greater and greater scale that help us lower our uncertainty about one another. Now, what we have today is an extension of this exact same story. But instead of using an institution as sort of the middleman facilitating these experiences, we have a technology that allows us to do the exact same thing. Blockchain lowers our uncertainty about one another in our exchanges of value. So we're using a technology alone to do this same story of trade. What's interesting, though, is it looks a little bit more like our earliest exchanges of value, because we have this direct one-to-one visibility into our transactions, but we can accomplish it at much greater scale. So the thing to keep in mind is sort of the story of trade is that progressively, we found ways to lower uncertainty so that we can expand how we do trade and the kinds of business we do. Now, blockchain is unfortunately not very visual, and it's very hard for people to understand really what's happening with this technology. So the analogy that I like to lean on is on this piece of paper that tells my bank and your bank how to make this transaction happen for us. Now, if I wrote all of the checks in a given checkbook, I'd be left with sort of this stack of carbon copies, right, of all the different transactions I made over the life of that checkbook. That's essentially what a block of data is in a blockchain. It's a series of transactions that have been made over a period of time, and then they're cryptographically lumped together and linked to previous transactions. So we get this long history of events, this ledger. And unlike in the banking scenario, where your bank and my bank exchange value on our behalf, this long history of events is actually stored across many different computers. And these computers, this network, is coming to agreement about all the transactions that happened in each block, and then moving on to the next set of transactions. So we're essentially using a network without a central administrator to do this work of helping us agree to the same reality. So if we continue our story of sort of how has trade evolved, blockchains help us lower uncertainty specifically by creating a decentralized framework for something called shared state, or really just shared reality, right? We're all looking at the exact same thing, and we all can verify that the exact same thing happened, and we're not relying on somebody in the middle to do that for us. Now, this all started about 10 years ago with the publication of a white paper that described Bitcoin, and then the implementation of Bitcoin as the first blockchain and also the first application, right? It's a crypto asset that gets traded across this particular network. But since then, we've seen a lot of evolution. This whole space is changing very rapidly. In 2015, we got the emergence of the Ethereum network, first implementation, which really took this same architecture, this sort of shared network architecture of transactions, and said, well, they don't have to be a transaction of a crypto asset between accounts, the way Bitcoin is. We can actually program any kind of transaction to run on this network. And so Ethereum sort of took the next leap towards a more generalized network that does trade. And even if you don't pay attention to sort of the market volatility and the pricing and all of the things we see in the news about different crypto assets, you should be paying attention to the idea that this protocol technology is growing at a vast rate. The number of projects that people are pursuing, the science that's going into these projects to change how we think about network architecture that allows us to have the same reality across many different parties. That's growing very quickly. And so it's starting to look more like this. We have a lot of new networks, a lot of different tools that have specialized in different ways. We have different blockchains that have managed to create greater confidentiality and privacy in our transactions. We have different blockchains that do more enterprise-grade work, or some that are just trying to create better scalability, throughput of transactions. So there's a lot of experimentation at this protocol level. And the thing to keep in mind here is, just like I said, blockchains extend our trade by lowering uncertainty. The other way that they accomplish this is really their modern-day computers. They're global, decentralized virtual machines that anybody can perform transactions on top of. Anybody can write applications on top of. And this is really the key, because if we think about blockchains as modern-day computers, then we can sort of imagine what this future might look like. So the computer stack we're used to, is sort of the technology stack of our digital age, is pretty simple, right? We have core infrastructure at the bottom, TCP/IP, the network protocols that make up our internet today. We have middleware above it, different APIs and libraries and tools we use to write on top. And then we have applications at the very top, things we're used to using, right? Uber, Dropbox, any of the email applications you might use. Blockchain is not that dissimilar. We have a similar stack. We have core infrastructure, different protocols that make up specific networks, whether it's the Bitcoin network, Ethereum, Dfinity, any of the others. We have middleware that's growing, right? Different tools that allow us to write on top of or communicate with a blockchain. And then at the very top, we have applications. But the application space for blockchain looks a little different. And in part, it's because it relies on something called smart contracts. And this is why an if-then kind of statement. Right? It's simplistic terms of a deal. I'm going to pay you X dollars. Well, if we can write those terms in software code, we can execute them across this network. So smart contracts are sort of the core of what makes blockchains a tool for automating business logic and automating governance to a certain degree, right? The rules that you're setting, the conditions you're setting for different kinds of transactions. So this is kind of a big deal. This is what enables people to start thinking about, if we have this decentralized computing framework, this new kind of computer, and we can write decentralized software, we can write autonomous software on top of it that's going to execute as written. What are we going to use that for, right? What is this going to mean? What do you use a shared computer for? Well, at Animal Ventures, at our company, we've done a lot of different research on different areas you might use this. I started my research actually specifically on governance. I was interested in blockchain in sort of the early days, particularly as a tool that changed our trusted relationships, where we used to require a lot of intervention and governing frameworks in order to get the outcomes we wanted. So there's still a lot of work to be done on the governance side, but it's an interesting step forward if we start to imagine rules that can be codified through this technology. Additionally, people started working on identity frameworks. You can use this technology to create unique digital things. So that could be a digital version of physical identity, a human, an object that you want to track and trace, or it could be a real digital asset, like a crypto asset, a Bitcoin, or something else that gets uniquely created online. So there's a lot of work on sort of identifying things. And for us, that meant there's a lot of work in supply chain and asset tracking. The transactions that go into a good moving around the world or moving through its supply chain process. So our company, Animal Ventures, is sort of three things in one. We do a lot of education. We try to help people understand, what is this technology? How does it intersect with artificial intelligence and the Internet of Things? Sort of what's coming? So we do a lot of different education initiatives around that, including briefings for our clients. We also build, because the best way to learn is to actually sort of get your hands dirty. So we work with Fortune 100s primarily to help them experiment on how you could implement this technology with specific business strategies in mind. And then we do our own investing. We believe this is the future. It's a place that we should be spending our time, our money, our energy in understanding what decentralized computing offers. And so we do that across a number of areas. These are a lot of the areas that we think make up trade in the future, right? Industry 4.0, I mean, it's sort of a catchphrase, but we are seeing the automation of manufacturing and production that we're moving to one-to-one trade at scale. We work a lot with additive manufacturing. If you think about it, 3D printing means we don't need different transportation services to some degree, right? If we're producing and printing things locally on site because it's easier, we can make them precise now, then we're going to change how we do transportation, less shipping, potentially. We obviously do a lot of work on blockchain, which we see as sort of the next global virtual computer. It's the next global virtual machine that anybody can use. Artificial intelligence isn't here yet, but certainly smart algorithms are. So we're seeing our supply chains, our businesses get augmented. We're getting much better data and able to make much better decisions. And this leads me to the last area, connected devices, which has been around a long time, right? People have always talked about the Internet of Things. But the reality is what we should be thinking about is that this is, instead of 50 billion new devices that are connected, what we really should be thinking about is 50 billion devices that have wallets, that can make purchases, that can use an infrastructure like this to actually be participants in a global economy. So all of these sort of areas for us are about this idea that basically every asset, whether it's a digital asset or a physical asset, has a supply chain. And we should be focusing a lot of our understanding of the future on how different relationships are changing from sort of originator to end consumer. And those relationships are shortening. So if we look at our supply chains, and really any business, you can say we've sort of done OK at the top, right? We have smart algorithms in some places. We can do predictive analytics. We also have a fair amount of data below it, right? We're embedding sensors. We're creating much more real-time information flows. So we sort of have the top two. But I would argue we've been missing this bottom layer. We've been missing having some kind of shared network state, having some shared reality or infrastructure that we can actually make use of the other two on top of. So it's great to have real information about your company or to have intelligence that helps you make better decisions and crunch data. But if you're not able to look beyond your own borders, then that data may not be that useful. So a lot of where blockchain is headed is creating this fabric, this underlying infrastructure for enterprises to collaborate in very new ways and actually make much greater use of the top two. And this brings me to what I think is really the future of trade. When we think about it's not just for humans. We really need to understand that these are decentralized computing architectures that enable machines to transact with machines autonomously. And what do machines need? They need shared context and rules, right? If we want a machine to do business with another machine without us, we're going to need to give them some rules written as a smart contract that they're going to execute every time exactly as written. And we're going to need to give them some context, right? A set of knowledge to work from. So this is where blockchain plays a role. How do we imagine a trade infrastructure that doesn't just rely on humans but enables machine trust? Now, all of what I've described kind of relies on this word state that I've used a number of times. We have shared state or shared reality, and it's actually kind of hard for people to understand what that means. So the physical analogy that I like is that of a turnstile. Some people use an elevator. We see state machines in our lives all the time. They're just input-output devices, right? You feed it a quarter or your subway pass, and you can push it forward, and that's the input, and you get the output of it unlocks, right? You move forward. These are just machines that have very simple rules. If we think about the most common example of a state machine, your own computer. If you think about your personal computer, you control it, right? You're the governing force of that particular state machine. How do you manage the resource of that computing power? Well, it's not that dissimilar than how your computer does it for you. Today, when you use your PC or your Mac, you'll see something like this. It's an activity monitor or a task manager. And you have Spotify open and maybe your email and some other things. And your computer is doing this work of toggling all the time, managing its computing power and helping you prioritize where it gets used. The same thing happens with blockchains. We basically use tokens as a way to resource manage computing power. So we're paying for transactions executed across this network. We're paying for the computing power. So if we think about this future of decentralized trade, an economy that relies on humans and machines collaborating, I believe, at least, we should be paying a lot of attention to how exactly state awareness and what does that look like. And so if you leave with nothing else about blockchain, I would encourage you to really think about this technology stack as a continuation of something we're actually pretty familiar with. We're going to have many, many layers of growth happen at the same way we did for the modern internet era, when computers and humans started working together, right? We got an internet, we got PCs, we got hardware, we got all these things. And then we started getting applications. And that's what made our internet so useful. It's what made our economy change. Same thing is true for a decentralized era of trade. We're going to see our economy change, in part because we have many new tools. If you want to learn any more about this or any of our perspectives on supply chain, you can look at our site or just get in contact.